Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Oh, you know what? We didn't get the music. So here this morning, I was like, oh, hey, I forgot to put the trash out. So I go outside, make sure that I have the trash out there. And as I'm out in the street, you know, putting my trash on the side of the curb, I'm like, wait a second, how come nobody else has their trash? Oh, that's right, because it's Wednesday, not trash day. So that's where we're at today. I felt like a brick when I woke up too. Doesn't make any sense because I think I slept pretty good. All right, so here this morning, let's come and look at the charts. We did have ADP earlier in the session, and that came out much lower than expected, 152,000 versus 175,000. So if you needed any hints about what Friday might be like, ooh, mama. Okay, so here's the treasuries. They've been on a really good run. Yields have really come back this week, and that ADP, spiking the treasuries up there again this morning. Here's the S&P 500 struggling. So we are seeing concerns about growth, but it's not that bad. Oh, we're a few dozen points off of the all-time high. It's so hard. No, it's fine. Oil just got creamed though, man. That day, 2 days ago. Oh, mama. But we're just kind of languishing since then. Gold and silver sideways. Well, silver is a little different. I don't know what to think about that. They're doing better, but then not as good since the jump. Kappa getting hurt here. Global growth still looking a little weak. And then, okay, yesterday we had a big move in the Japanese yen because they're going to buy bonds. And they've given up all of those gains this morning. And that, by the way, despite the ADP news. So that, I think, makes things difficult for us. Bitcoin, oh, okay, they're above 70K. Before here it was meh here. I'm kind of like, okay, let's let them cook. So that's where we're at this morning. And now the big moment of truth. Our indicator, I made a couple of changes to it yesterday because I realized that it was caching. It was doing the caching stuff at the beginning, like before it does the bar, and it really should like the saving bit. It does it the start instead of the end, and I'm like, shouldn't it calculate the thing and then cache and then do the current bar or something? It made sense with the indicators that were caching. They were all like on each tick sort of indicators. But now that I've got one that I want to do both, doesn't make, so I split the method up and I changed a bunch of crap. Okay. So the moment of truth here is if I scroll back to yesterday when I first created this chart and started testing it, do I still see values? Oh, we do. Yay. Okay. It works. I should send Uzi a new version. So let's do that first, shall we? I don't have any bottom of the, well, there was Canadian labor productivity, but we got Bank of Canada rate statement at 9:45. Actually, let's do the, where's my, oh, it's over here. I moved it over here. Where's my notes? Let's do that. Something fell and I don't know what it was. Okay. Move today to 2024-06-04. Today's 5th. Okay, so flows today, ADP week. JPY gave up gains. We've got a Bank of Canada decision. We've got, and the big one, this is the big one, services PMI. And then we also, oh, is that maybe tomorrow? Tomorrow we have the ECB. Let's just mention that. Tomorrow ECB. So that's a lot going on here that, you know, makes it difficult for me to sort. Well, okay, so ADP week would be a buy. JPY giving up gains would be a sell. Bank of Canada decision is like a wait. Services PMI is a wait. So I'm getting like probably now's not the time for trade. Okay, so what was I gonna do? Oh yes, I was going to export this for Uzi, who has become our beta tester on this thing. And I will just add the market order imbalance thing again. Where are ya? Cash. And then there's also a cash indicator base. By the way, where's my Discord? Oh, and you know what? I have I have Visual Studio still running from yesterday. That's funny. Okay, but really, where's Discord? Where'd you go, Discord? Oh, there you are. Okay, did you change the math behind how the output values are calculated? So what we found out yesterday, or what I was able to confirm yesterday, is that the odd discrepancies that I was seeing in the math had to do with multiple or multi-threaded considerations. So what was happening was I have this value that is how many orders in the current bar, how many market orders in the current bar, and I use that 2 or 3 times in the calculation. And what was happening was it was changing. Other threads were changing that value as I was going through the calculation. So what I did was at the very beginning, I get the current value and store it to a permanent location so that then from there other threads can change that and it won't change anything. So that's what the problem was. Once I fixed that, everything matched. So then what I did, the other changes that I made to the caching bit were more about when it was in tick replay versus on bar close, the lines that got exported were like different. There was like an extra line on one and not the other one. And I wanted the Excel spreadsheets that it made to be pretty much the same. And it does. The only difference is the on bar one, the previous bar is, the first bar is just blank because there was nothing there, right? If I were to automate your entries based on imbalance, are you talking about our market imbalance indicator? Well, so for our market imbalance indicator, it kind of depends on how many trades you want to take, right? So if it's an automated strategy, I think it might make sense to do it at 0.6 and 0.4. Because that's just going to give you more entries, right? That's just going to give you more entries, and you're going to be doing all of this additional stuff, like filtering on top of it, right? So you don't want your initial sample size to be too small, because then when you filter on it, it's like, it gets crazy, right? If you go, the further out you go, like if you use, like I bet you could use a 0.95 and a 0.5. Yeah, but it would maybe give you like one a week. And then you filter that. That would be too few trades to make any conclusions from. Yeah, Uzi says he's doing 0.3 and 0.7. So if it was an algorithm, I would kind of make it more generous. But for discretion, you might want it to be a little higher. Like what Uzi is saying, like 0.3 and 0.7. I think that once you get to 0.8, 0.2 and 0.8, you might be talking too extreme. Although I do wonder, are you more likely to see those extremes on short-term basis or a long-term basis? I don't know. I haven't put it on, you know, like if I put it on a 30-minute, you say it is short. Okay. I was like, how likely are you to get a 0.8 on a 30-minute window? Well, yeah, but, or rather, let's not say the higher the value. The further away the values are from 0.5, the less trades, yes. You know, it's just like RSI, right? RSI kind of does a similar thing, and it's 70 and 30, I think, are the numbers that they recommend to use and whatnot. And if you go further away from the 50, the less trades is getting. The stronger of an imbalance is required. 30, basically, if the 30-minute imbalance is above 0.5, I watch the 10-minute imbalance for dips to 0.3. Oh, I gotcha. You look for an imbalance contrary to the longer run imbalance. Yeah. I mean, so I really want to get to now that if this works and by Monday, we don't notice anything else odd with it, then I think my next project should be going back with all of my saved data and export that or recreate the thing in Python and recreate what the data would have been with my cache data that I have, rather, so that we can actually backtest it and see. Because I would think, you know, what Uzi's talking about, you look for an imbalance contrary to the longer run imbalance. Makes sense, except for it will get screwed up when there's reversals, right? Oh, actually, you know what? I don't think that should be our next project. Our next project should be the algorithm that knows when news is and doesn't trade when there's news. I need to find a data source for that. You guys got to help me on this. Look for a free data source that gives you historical news items so that we can generate a data sheet of the time of all major news releases the past like 10 years or something, and then use that to tell our algorithms don't trade during this time so that those news moves don't factor in to our backtest results, to see if removing that perhaps removes some noise and helps some of our algorithms take more advantage of fundamental discrepancies in the market behavior. So that last little bit there, they really moved up. Was there some news or something? Well, 9 months ago, there was a release of the Reuters poll, which says that 68 of 116 economists in Mull in May pull say 25 basis points. Blah, 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 blah. Okay, so so you know what the big news is? I wonder if I can find anything else about this. Well, let's see here. Eric Wallerstein, weak ADP print for May 152 driven by services gains. Payrolls declining in manufacturing. No surprise there. Job switchers started to decline consistent with lower quits rates. I'm going to sit up a little bit. Becoming very conscious of me slouching over because it's hurting my ribcage. And this particular chair, super comfortable, doesn't really force you to sit up straight. It kind
Block
of
cell.
coddles you. You know what I mean? What about high side minimum volume and low side maximum volume? I'm not familiar with that. It is, I think it's kind of a hard thing. So something that we humans will notice is, oh, that was a lot of volume. Cool. How do I incorporate that into an algorithm? Because you kind of have to look at it on a relative basis because it always changes over time. Those sorts of things can be hard. So then you look for, that's when you start to use things like, like MACD or, am I thinking MACD? No, not MACD, Bollinger Bands. Sorry. Bollinger Bands is a good example of. So then you say, okay, well, here's the average and here is it going outside of the average. So, right, something that kind of adjusts. Okay, I have some food. Let's eat some food. I was going to say, the big piece of news that I saw this morning from Unusual Wells was that they were claiming that BlackRock and Citadel were starting an exchange in Texas. And everybody was like, oh, this is such a, terrible idea and it's not going to do very, and I'm kind of like, well, I'm game. This just kind of goes along with the whole exodus from New York and Chicago sort of a thing. Let me search around and see if I can find anything about that. See if I can confirm that story. Well, they're citing the Wall Street Journal. I don't see anything on Zero Hedge about it, though. What about CNBC? Based on instruments volume that's sufficient to tick up or tick down? I don't know. But making an indicator like that would be kind of a little iffy, I think. So I definitely come over here and watch and I'm like, oh, there's 4,000 contracts on there, but then they pull and how many actually trade and how much does it take to trade up? And then if takes substantially more or less than that, that's when I kind of start to take notice, right? What are you saying here? We're rallying into prices where technical sellers could start hitting bids pretty hard. Well, based on the session, yes. I'm still not sure what was with that jump. We had that jump. There was a little bit of pushback, but it seems like they've stabilized and they're still kind of hitting up there. I'm not seeing very clear, like long-term imbalances in the treasuries yet, but meta order could just be starting. The issue I have though is that, you know, we've got a lot of stuff coming like Bank of Canada and services, PMIs and stuff like that. So like, I just don't see like a really strong meta order coming through yet. So I think that I would maybe kind of lean on the side of what you're saying there, Uzi, that it might be hard for them to break out here. But like they're testing it. So 06 is actually, so my DOM here doesn't show you the action from just before the open. So 06 is technically the high. So if they breach this 04 half, you know, you might not see as much of a ruckus about it as you normally would. Imbalance trend is moving opposite the price, which, yes. Well, in the 10-year in particular, it's been selling here over the last few bars. This is kind of weird. Is it because of the Japanese yen? No, it's not. So this is the part. Whenever I see the volume doesn't match up with the price, first thing I do is, okay, was it a currency thing? Well, the dollar is getting creamed here. The dollar is getting creamed, but the Japanese yen is not moving, so that's kind of weird. But it could be dollar driven. The thing I'm noticing with the indicator, its movement relative to price outcomes is important to consider. I think it spells trouble with blindly programming values into a trading strategy as it is. Yeah. Well, no, I mean, it's like this broader thing that I've been saying. Well, there's two broader things that I've been saying. One is when it comes to the overall liquidity and like, is there more or less liquidity on the buy side or the offer side? There are periods of the market where it will always go towards the larger liquidity, and there are periods of the market where it will always go away from the liquidity. And it seems like there is some sort of a Markov system going on where, oh man, hold on. Don't know what was with that. Where if you can figure out what kind of regime we are in, you can you know, that's a pretty strong indicator of which way we're going, right? So I kind of think that there is, to some degree, some of that goes on in the treasuries as well. But then the other side of that is that when I'm looking for a large meta order, right, I want to see autocorrelation in price, autocorrelation in the change in cumulative delta, and I want to see correlation between price and that cumulative delta. And if they're not correlated, then I don't have a trade. That means that the market volume is not actually the biggest decider in which direction we're going. So that's not the situation that I want to trade. And so you should see the same thing with the imbalance indicator, that there are going to be times when the imbalance does not match up with what's going on in price. And when that happens, I don't want to take a trade. I don't want to take a trade. But I also kind of want to see if I can understand why it might be doing that, especially if it's doing it for a persistent time, right? Like, I think, a few bars, like 15 minutes of that in the treasuries might not be unusual, especially if we're just in market chop, right? That could just be market makers pulling their bids and offers to introduce a little bit of randomness into the market, right? But especially if it's persistent, I want to figure out why that's happening. Like, why is it that the market orders are going one way, but the market makers are taking it in another direction? And your most likely culprit is almost always the currencies. Other markets, there could be other things to consider, like the various hedging strategies and things like that.
Block buy.
What do you think about that one? That kind of felt like it came back a little bit too far, and then the buyer was like, okay, I'll buy 5,000 contracts. That was a 5,000 block buy. That's very curious to me. But you know what? Like the longer run trend here is selling in the treasuries, at least. So that kind of feels more like somebody that is not happy about it and is trying to job own it a certain direction, you know? I don't know if that's something that really gives me confidence in the trend and wanting to take a trade, you know? Okay. Let's read this story. BlackRock and Citadel Securities are among investors. Okay, maybe they're not running it, but they are among investors backing a group seeking to start a new national stock exchange in Texas. The TXSE chairman. Oh, so it's going to be called the Texas Stock Exchange. And CEO James Lee, never heard of him. Let's look this guy up. Can we look this guy up? LinkedIn. Why do I have cap locks on? James Lee. There's a senior developer at OC Tanner in Utah. I don't think that's what I'm looking for. What about TXSE? Oh, look, there we go. James H. Lee, Chairman and Chief Executive Officer at TXSE. Well, he's got gray hair. And he looks kind of bulky. He looks like, he used to work out, So I don't know if that means anything, but we will follow him. And we will follow this exchange. Wait, where is it? Company. Yes, I'll allow pages to see that I visited. No, don't turn on notifications, please. No, they're not even posting anything anyways. Okay. But then let's see here. He does do stuff. This morning, we are announcing TXSE Group plans to launch the Texas Stock Exchange. The Texas Stock Exchange will be a fully electronic national securities exchange that will seek registration with the U.S. Securities and Exchange Commission. The Texas Stock Exchange will focus on enabling U.S. and global companies to access U.S. equity capital markets and will provide a venue to trade and list public companies and the growing universe of exchange-traded products. Texas and the other states in the southeast quadrant of the U.S. have become economic powerhouses combined with the demand we are seeing from investors and corporations for expanded alternatives to trade and list equities. This is an opportune time to build a major national exchange in Texas. My question would be, okay, what would be different? What are they going to do different? And would they have different trading hours? Because if they have different trading hours, that would definitely throw a wrench into the... I don't see the point, though. Well, the point is to have an exchange that's not in New York, because New York is becoming like a real pain to work in. It's really what it is. It's really what it is. I don't know if how far they'll go with this, though. Okay, I will like this post. Mr. James Lee. Okay, that I understand. Yeah, it's right. It's really that simple. There's some people in the industry that really want to move away from New York. That say, like, New York, you've been pushing us for too long. We're going to go somewhere else. And New York might find that it's easier to move that stuff than they thought. And that would be a warning for the United States. Like, maybe don't try and piss off your wealthy people. If they pulled Wall Street out of New York City, I can't say I wouldn't legitimately die. You can't say you wouldn't? Man, that's too many double negatives for me, man. Too many double negatives for me. He posted this, he posted show all posts. I'm all down. Now what we need to do is we need to make Utah, Salt Lake City, the new Chicago. We got the inland port over here. I think that's still going. I haven't heard anything about it in a while, but I'm pretty sure that they're making the inland port. So now we just need to have the commodities exchange. and I can, you know, become a multi-billionaire or whatever. Sound good? Okay. The Texas economy is on fire, he says. Yeah, not too much interesting on his LinkedIn, but okay. Actually, you know what? Let's come back to this guy. Connect. Send without a note. Okay. Probably ignores it though. Anyways. The Wall Street Journal reported on the endeavor earlier, saying the exchange is billing itself as a more CEO-friendly alternative to the New York Stock Exchange and NASDAQ in the face of rising regulation and a disaffection with increasing compliance costs. A contested NASDAQ rule requires listed companies to disclose diversity information on their board of directors. Okay. You know what? Like, I hate that rule, but I'm not like, okay, it's not a huge deal. Is that like a reason to start a new exchange? Whatever. The SEC approved the plan in 2021, but now it faces a new challenge in a federal appeals court. TXSE's website said it will be a fully electronic national securities exchange that will seek registration from the U.S. Blah, 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 blah. We already talked about that. The TXSE will target companies in the southeastern quadrant of the U.S. In an interview with the newspaper, Lee thanked Texas Governor Greg Abbott for his support and leadership. Okay, so the Unusual Whales headline about this is bullshit. That's what we just learned. Somebody is starting a stock exchange. They are asking for investors. BlackRock and Citadel invested in it. They are not like the way that this is fun. The way that this is worded, at least, originally made me think like, oh, BlackRock and Citadel are going to start in. No, they're seeking funding, and you know, probably all of the big guys are probably involved in some way, you know, like the way that those sorts of things go. You get money from everybody. So that's not necessarily as big of a deal as it seemed at first. Be interesting to see a competitor, though. So I am on... I made a post yesterday on Reddit and I'm getting a lot of messages on it, and it's kind of annoying to go to Reddit and see all of the notifications. So there was a new Arena FPS game released yesterday, and I played it, and it was kind of fun, and so I like made a few Reddit posts about it and stuff. I kind of want to go, I'm kind of like, oh, let's not trade, let's just go and play Diabolical. But no, we're not going to do that. We're not going to do that. We're going to focus here because we've got a bunch of data coming up here. So about 30 minutes before it gets very interesting. The white Chicago, all the capital, none of the stray bullets. Oh my gosh, Uzi. That's exactly it. Utah. Yeah, that reminds me. So yesterday, you know, we got a hockey team now. And the hockey team released the season ticket prices. Wait, let me pull it up. I'll show you. Let's see if I can find it. Here we go. Season ticket pricing release. There we go. Okay. So upper bowl seats, like the cheap seats, The ones, let's see here. Where are these ones? These are the grays? No. Oh, yeah. These are up here, I think. You know what? I'm too colorblind to tell. Is this... Wait. I freaking hate this stuff, man. No, come on. You know what? I'm gonna restart Epic Pen because it's... Is this and this the same color? I think they are. Okay, so the nosebleed seats, you pay $2,646 per seat for a season ticket. It's kind of jarring. I mean, you're going to get at least two, right? So $5,000? $5,000? I don't think that too many middle-class Utahns are going to spring for that. like when it's cheaper to go skiing, I think you might have a problem there. What do they got for, oh, look here. Club level. $500 a game. Okay, so if I was like springing with a bunch of other people, like let's say, I don't know how many people can fit in the different clubs. Wait. Delta Center Clubs, something like that. Premium seating. Luxury suites. Let's see here. Notch boxes. Way level. Capacity. 4 to 8 people. Okay, so class, man, some of these are insane expensive. No, these are just like the front, oh, these are just like the front of the thing. So these are just like individual seats still. Good grief. Good grief. Crazy, 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 crazy. I don't think I would, no. I expected it to be expensive, but that's a little bit too much. I'm going skiing this year instead. I got that, you get together with like, four more people and like, split, because I can't go to a game, every game, right? But even if you split it up, man, it's too much. I don't feel like you're getting good value for your money. I wonder though if they do something like that's the price now and then after, it goes down. Apparently, it's even more expensive than jazz tickets for the basketball team. This person, I doubt we will know what they'll cost at the box office for a couple of years, as these games will sell out well in advance for the foreseeable future. Really? Okay. Apparently, this is wildly expensive even compared to other things. Small arena and demand expected to be high. Okay. Well, that last uptick was a little odd. I don't know though. Like, so there's been a little bit of interesting activity here in this area in the treasury, right? But like, look at the chart, man. It's going nowhere. It's market maker shenanigans. Huh? Huh? It's so weird to me that in the beginning of my trading, it would just get faked out on everything. And now it almost feels easy to me to be able to tell when the market maker is just messing with people. Watch next trade, I'll get faked out by them super bad and regret saying that. I'm just like, there's no reason to trade. I see something weird. I'm like, yeah, that probably is not. That's probably shenanigans. I want to compare it to yours. What we should do is at the end of, I don't want to open it up yet because, well, if you have the file open in Excel and then it tries writing to it, it will fail writing it to it, right? So, but at the end of the day, we should send the cached files and then compare them. Interestingly enough, my 10-minute market imbalance doesn't show too strong of a degree of imbalance, right? Like yesterday, I was reading 0.6 and 0.7s, but my chart has it mostly around the 50. So what I see there in it coming up and down in these shenanigans and everything, not resulting in as strong of imbalances as I anticipate. Is PMI going to be a strong move? I would think so, yes. Not the 745 ones necessarily. You will probably get a move off of that, but I would consider the services PMI to be a diamond level. How does it work? It's like legendary, epic, rare, common. So I would consider it an epic data release. I'm still reading this thread about hockey. Wonder if there will be 5/10 game packages available. Yeah, that would make more sense to me. $8K a year for 2 tickets to sit lower section of the upper bowl with a decent angle of both ends, which doesn't include parking, food, drinks, etc. Realistically, you're in 10K for the season. Yeah, I just can't imagine. Like, here's the thing. My understanding is that my income relative to most Utahns is really, really high. So if I come in and I'm looking at that and I'm like, that's kind of high, I don't know if I can justify that expense, then that means that, like, basically nobody in the middle class is going to be considering doing that. And I'm just sitting here like, are there really enough rich people in Utah to fill all those seats at those prices? I'm just shocked. It reminds me of that scene in Fast and Furious, you know, when he's being that character Roger or whatever, and he's like, I just rolled up into the local Starbucks today and there was like 3 of these in the parking lot, which says to me there's too many self-indulgent wieners in this town. That's what it means. So I got this little like sand bucket full of gems for my wife and kids, and I think they liked it. Some pretty cool gems came out of it. I wish I had brought one in here. I could show you. But so of course my son, he goes and plays with that a little bit, gets sand all over himself, and then comes into my office. So now there's like sand on my desk. That's okay though. You know what? I don't have to see the games. They just need to have it on television. You know, I'd pay $10 a month or whatever, $20 a month to watch the game on streaming or something. Oh man, the new Star Wars Acolyte show is out today. Like there's been a lot of drama in the Star Wars world, right? But this one in particular has had like people leaking about how woke and terrible it's going to be for like a long time, because it's been in development for a long time. So the Star Wars subreddits are talking about that, and it sounds like it's getting crazy. Hey, they're breaching the high now finally. Okay. Well, so I come back and I look at imbalance, or I look at like the trendiness of my cumulative delta here. It's okay. It's been, you know, on a slow and steady market buy imbalance for the last 10 minutes or so. It looks like it's being driven mostly by the 5-year though. So like, even though I don't see it in the knob, and not even in the 2 and 10, but in the 30 and 10, I can see a little bit. So maybe we're getting a steepener coming in. Steepener. Maybe. Oh, but they came back in. We'll see. Because it could be one of those like fake everybody out, still market maker shenanigans, right? Except for they're just like just before the equity opens. So usually there is a little bit of a move just around the equity opens, right? With home prices out of reach, build to rent communities take off. Can you imagine doing all this stuff? You know, helping them build the home so that you can rent it? What? Oh my gosh, this is so crazy. Berkshire half of the way stock suffers worst loss in 4 months after one day after glitch. Oh really? I didn't notice that. Let's go check that one out. You'll own nothing and you'll be happy, right? It's so much cheaper to own nothing though, guys. It's so funny to me because, well, I don't know, maybe it's just me, but it kind of feels to me like everybody is in the culture is going the other way, that everybody is so sick of how shitty everything is, right? Like sick that you know, like I call it the H&M, right? Like H&M expects you to like wear it 5 times and then throw it away. And you buy new clothes. You're constantly buying new clothes so that you can be in style. Not that I think that anything at H&M is like super cool style wise, but okay, hey, there's a little bit more there. There's the 06. So they're getting a good run now. Actually, that you know, they reached it by a tick, and I was kind of like, yeah, okay, maybe. But then this recent run, that was impressive. But anyways, I just, everywhere I see, it seems like everybody's so frustrated by like the planned obsolescence of everything, and they want things that will last. You know, like it's definitely the case on cars. Okay. Like everybody wants the Toyotas because those are the cars that last. So with that, we're pulling up the stocks. GameStop. They're kind of opening up negative, but you know, that's probably no big deal. Let's let them work that out. BRKA. Oh, jeez. I think you need to trash this. Oh, sorry, I wanted BRK. BRKB. Oh yeah, they did get hammered pretty good yesterday. It's not a huge deal though. Yeah, I mean, they're back to the price they were at 2 days ago. That's so awful, guys. Who was that? Who posted that? Forbes? How dare you clickbait me, Forbes? How dare you clickbait me, Forbes? Or we're pissing ourselves over cars that will require a $24,000 battery, right? Like the more that I learn about the experience of owning an electric vehicle, the more and more surprised I am that there's that many people willing to buy them. Like, to get the really good charger, you have to have like really nice power that most people don't have. With the kind of charger that most people can have, it's hard to fully charge your vehicle. And then for people that like live in apartments and stuff, which is a lot of the people that need these cars anyways, you know, then you have to go to the charging station or whatever. They don't work well in the cold. So in Chicago, people were just abandoning their cars. The car only lasts so many years, and then you have to just completely replace the battery or the motor. Like, I just can't. It doesn't sound like a good product to me. Yeah, let's turn transportation into owning a cell phone. Someday. So like, if I was going to make a sci-fi series, okay, if I was going to make a sci-fi, I don't know if I would be a good writer. Probably would not be. That seems to me like something that you would have to put a lot of work into. So I wouldn't want to write my best idea as my first story because it would probably suck, right? But if I was going to make a sci-fi series, my sci-fi series would be you live in a world that has just invented teleportation. Like in Harry Potter. In Harry Potter, they have, you know, you can aspirate and then go to a certain place. And like if you aspirate to Wizards downtown, you know, they have like this place full of fireplaces where everybody comes out at and stuff. So I think it would be like that. It'd be like, you can go to your teleporter, and then your teleporter can teleport you to other teleporters. And like, how does that change our world? But then somebody invents a teleporter that allows them to just teleport to anywhere that they want. And that really, really upends the world, right? Because then it will be like, you can steal things. What are the warfare consequences of it? Like, why, you know, they kind of have a little bit of like this sort of thing in Star Trek where it's like, you know, your deflector shields go down and then they all teleport on your ship and are attacking your ship. But like, I want to know, how would teleportation work with like whole armies, right? That's kind of crazy to think about. Can you imagine a world where distance doesn't matter? You could live in the middle of nowhere. You could live in Montana and then commute to work to London, right? Because transportation is instant. That's the sci-fi that I would make. That to me, the last remaining limitation in our society today is distance. We can communicate, but you cannot physically be there. And if things changed to where everybody could just physically be there, because you can transport yourself to anywhere you want instantly. Like think about that. You live in Montana, you work in London, you decide to go home for lunch. It's no big deal. It's just like walking into the next room. That's crazy. That's crazy. That would be a crazy world. That's what I thought of when you said, let's turn transportation into owning a cell phone. But then, like, that's the whole thing, too, is that, like, my cell phone, the planned obsolescence just pisses me off so much. Because my cell phone lasts me way longer than their planned obsolescence. You know, like, they want me to replace it every 2 years. But I can get these phones to go, like, 3 or 4 or 5 years. And the only reason I get off of it is usually because, you know, they start doing things to make it crappy. And then I'm kind of forced to change. That or, you know, I crack the screen or something. I wonder how electric cars would have been if they wouldn't have been backed by the government. If the government would have stayed out and let it play its business course, would it be different? Actually, I don't think it would. like the government's getting involved. I went from a Galaxy 9 to an S20. That's almost exactly what I did too. Yeah. This is an S21 Plus, and they're like 5 phones further than that now, right? No, I don't. The government's like pushing electric vehicles is a fairly recent thing. Like, it's only been since Joe Biden has been president, hasn't it? I don't know, might be different in China, but here in the US, electric vehicles have only become relatively common in the last 4 years. So the reality is that there was demand for it, and Tesla was doing well, and the companies were building the technology out on their own. So I think that the only thing that changed with the government backing it is that it kind of coerced everybody into jumping into it before it was really ready. You know what I mean? Yeah. Oh, you got over a century of people wanting nothing to do with it, electric vehicles? I really think that what has happened here with this is that the government has pushed the electric vehicles on the populace before it was ready, and may have done long-term irreparable harm to the electric vehicle industry. So now all of these car makers are coming out being like, you know what? We're all in on regular gas vehicles. Like, we're not going to switch everything over to EV, even though the laws and yada, yada, yada. Because, like, they did that for a little while and got burned. And so now they're like, we're not going to mess with that. Or they're going to hybrids. Like, hybrids are in a pretty good spot right now. So it may have actually done harm to electric vehicle adoption. Because there's a lot of people now that are like, I don't want an electric vehicle. Are you kidding me? Like, right now, I wouldn't buy an electric vehicle. No way. No way. But 10 years from now, maybe the technology will actually be good and it will be worthy of our adoption. And that adoption might be slower because everybody has bad memories of 10 years ago when they forced everybody to get electric vehicles and they sucked. You know? It is, and this is the problem. I don't understand why people don't naturally understand this. To me, this is just like common sense. Okay, the government can never be effective because everything that it does is basically things that nobody in the private market wants anything to do with. Right? It's not. You can't do it because it's not profitable. And that's why you need the government to do it. That means that everything that the government does is going to be ineffective, right? So if you come in and you say, well, we need the government to give subsidies and everything to help the adoption of X thing, whether it is electric vehicles, renewable sources of energy, etc., 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 what you're admitting is that new technology that you're talking about sucks right now. If the government has to subsidize it, that means that it's not as good as the competing technology. This is just why isn't this just common sense? Multiple hybrids. Yes, good point. We are going to get the PMIs and Bank of Canada decision here in about 2 minutes. I do wonder how much of this activity higher is front running for that. I just can't see somebody making a big bet for the Bank of Canada decision, but we will see a little bit of volatility there for that. But I'm kind of thinking, maybe those services PMIs are expected to be really weak too. What are the numbers that we're expecting? Okay, well, the S&P 500 services PMI, they're looking for 54.8. But the ISM services PMI, they're looking for a reading of 51. So what if that ISM services PMI comes out and it's like 48? That's would be my guess. Notice my guess is usually like the news has been tending to go this way. So I think that it will come out with the trend. And the trend is that all of the numbers come out weaker. Yes, my understanding is that Canada is supposed to cut. Yeah. Everybody's cutting except for the United States. And meanwhile, in the United States, they're saying like, oh, actually, all of the data that we've been basing things off of that like the economy is too strong and so on and so forth is because we've overcounted jobs by like 1 million jobs. So now all of a sudden we're going to find out that actually like we're at risk of going into a recession and we should have been cutting like in May. Okay, so there's a decent move off of that. And yes, the Bank of Canada did just cut as anticipated. That would probably mean, well, I wish you had said that like 5 minutes ago, Uzi. Well, there was a big upward spike, but it was kind of temporary. It's actually kind of coming off and reversing. I've been saying the job numbers were complete BS, you know. Well, my take is that the numbers have been awfully unusual for a long time. And we've documented that quite well. It was kind of weird because I was having a conversation on TikTok with an economist about this. And I was like, yeah, but like, you can't tell me there's not something weird about these job numbers. And he was kind of like, oh, I'm not sure really what you're talking about. So then I showed him. I was like, listen, they revised it down 12 months in a row. Or like 12 out of 14 months. Like, you don't think that's weird? I was just like, well, that's kind of interesting, I guess. What about the longer, like, what about the yearly revisions? And I was like, oh, I can't really remember the year. You're talking about in February where they kind of like, they do larger revisions and they change their weightings and stuff like that. But then I'm start getting all of these stories about that Bloomberg is saying that they've overcounted by like 500,000 jobs and that like around Jackson Hole that they'll be telling us they'll be revising it. I'm like, 750,000, but yes, yeah, this is not quite 1 million. Still, it's a lot. It's a lot. Zero Hedge had a story about it, and I thought they was really good because like they went through, okay, so here's all of the theories that we've had about the current data. Like, is it because immigrants are taking all of the jobs and things like, right? But if you know we overcounted by like 750,000, then that just kind of like makes all of those theories and everything pointless, right? Oh man. Let's come back over here. Oh, I closed it. Never mind. Let me open up one. Let's just take a quick look at some of the stocks. Oh, GameStop pumped on the open. Oh, they didn't get too far. And no data gap yesterday either. No halt. No halt on that move. Well, the Treasury's back to 05 does make me wonder again how much of that was front running the Bank of Canada decision. But I'm still kind of like, well, so they cut rates when everybody expected them to. That's reason buy Treasuries. Okay. You say so. Let's see here. Although Q1 growth was weaker than bank had forecast in April, consumption growth was solid, while business investment and housing activity also increased. The Bank of Canada's Governor McElman says inflation could be higher if global tensions escalate, if Canada house pricing rise faster than expected, or wage growth remains high relative to productivity. It sounds like, based on that release, though, just from what I heard on my news squawk just now, that the market expects that they will cut again in July. Canada is awful. They got some problems, man. However many years of Trudeau that they've had has not been good to the country, in my opinion. I saw this thing the other day. Is it real? Do you really think it's the case that the reason that Justin Trudeau has lasted as long as he has is because he's quote unquote good looking? Is Justin Trudeau actually that good looking? And are people actually voting for him because he is good looking? I'm just a little shocked to hear that. He's not good looking. Canadians are just super woke. We have a lot of socialists. Yeah. Well, you know what it is there's definitely that. There is a part of Canada that is conservative and very much like American conservatives. Although I would say that they're more like Midwest and Intermountain West conservatives than they are Southern conservatives. You gotta understand Southern conservatives. I'm not trying to bash you. It's just that you're the only ones. Okay, you think that all Republicans are supposed to be like you, but you're the only ones that actually think the things you actually think. All the rest of the party is kind of on a different wavelength. Okay, but then in Canada, you also have, like you said, like real socialists, like European socialists, not like Democrat socialists, right? Or you know, like American Democrat Party. It's not like that. They're like real liberals, yeah. Or real leftists, let's say. Because Quebec is super hyper liberal, and that's like one of the largest population centers. So yeah. But yeah, I saw a video and they were blaming it on him being good looking. Okay. You think Fidel Castro is good looking because he looks like Fidel Castro. I'm just saying. I'm not implying any conspiracy theory. I'm just saying they do kind of look similar. And you know, I'm not good. I don't think that I really know what a good looking man looks like, but I don't think that Fidel Castro is good looking. So I don't know. So I'm going through here on the headlines, and on Zero Hedge, one of their top stories is Fidelity dominates Bitcoin ETF's second biggest net inflow day ever as crypto soars. And I'm like, oh, is crypto soaring? But like, it's just barely above 70,000 and kind of fading. So, okay. Now, let's read this story. A new poll shows that a sizable plurality of the American people believe that the New York trial of former President Donald Trump was a politically motivated show trial. As the Daily Caller reports, the ABC News Ipsos poll shows that 47% of Americans believe the trial was indeed a political hit job, while 38% say that the trial was legitimate and fair. That's actually closer than the headline makes it seem. That's still a pretty big deal that it's 47%. If it was like 55 or 60, then it would definitely be like, whoa, but that's kind of makes it as it's still a pretty contentious issue. Okay. On the question of the guilty verdict, 50% of respondents believe the verdict was correct. By contrast, just 27% believe the verdict was wrong, while the remaining 23% said they don't know. Oh, that's kind of weird. So they say that it was a hit job, but that the verdict was still correct? Okay. Among those who claimed to have followed the case closely, 55% say the verdict was correct, while 35% say it was incorrect.
Block cell.
After the verdict was announced, 49% of respondents said Trump should end his campaign for re-election. Among partisan lines, just 16% of Republicans said Trump should drop out, while 75% of them want him to continue his candidacy. Among Democrats, 79% want Trump to. Well, this is all just coming out along partisan lines. I don't know if this poll is actually really giving us any new real information. The same poll also showed that the trial and its outcome have had virtually no effect on Trump's approval ratings and have even led to a slight increase. While the former president had a 29% favorability in March, his favorability currently sits at 31%. Biden's favorability is at 32%, a slight decrease from 33% in March. Wow. The sample size was 781 American adults. I don't know if that's good enough, to be honest. Yeah, of course it was politically. I mean, does anybody really think that they would be polling these charges if it was a Democrat? No way. No way. I am still stuck at that. The day that it happened and you go and you look at what people were saying online, they cared more about what they were going to say online about it than they did about the actual political and legal ramifications of this. I'm very concerned about the political and legal ramifications of this. For one thing, if we're just going to start going after every politician legally in this kind of manner, that is going to lead to a real shit show real quickly. And the way that they were kind of able to pull this sort of stuff means that you have wide latitude to go after like all politicians. So that to me is something that I think could be very, very toxic to politics. But I'm also very concerned about like the legal ramifications of it, that they can come in and say that a transaction that you've done is actually a campaign expense. That is troubling to me, that they can say it's covering up a crime without having to say what that crime is or prove that crime. That's troubling to me. It's just like the legal, if this was allowed to stand, the legal precedents that it sets up look like something set to create a lot of problems in the future. And like, I feel like nobody cares about that. It's like, well, all they care about is Trump. Yeah, is this all in regards to Stormy Daniels? Yes, that's the one we're talking about. That's the crazy thing is that there's like 3 other court cases against Donald Trump going on. Yeah. Okay, well, after that quick pullback, after the Canadian news, they have recovered and they're right back up at the highs. This is the stop out zone though, so I think that they may need to consolidate a little bit longer for them to really be able to push new highs. At least I would say I don't think that you have enough people off sides to push them on that one. Oh, except for that we have the news right now, so maybe it doesn't matter. Maybe it doesn't matter. Like, as soon as I said that, the news squawk was like 1 minute, and I'm like, oh, it's that fast, huh? That fast. Okay, yes. So just remember, ISM services PMI, we're looking for a reading of 51. I'm expecting a reading below 50. But the prices paid is also an important number. So let's, try and look at all of the data. Might be a little bit of nuance to read in here. And this is looking like an A tier event. So it's going to move. The liquidity has been pulled. The micros are actually better than they were. It could actually, maybe I'll have the chance to execute something here in the micro. I don't know. 5 seconds. Let's see. Ooh, okay. Whoa. Oh, okay. So it was higher than expected, 53.8 versus an expected 51, but services prices paid was lower, 58.1 versus 59. Ooh, that's tricky one. That's a tricky one. Because that is a sell, but it's not as big of a sell as it would be if the prices paid was higher. So what does that actually mean for the net buying and selling? I think that it's kind of mixed. And so we're already mixed. We're already like within the day's range. That kind of makes it difficult for me to make any kind of real, okay, well, there was a big order right there. I could maybe scalp off of that. It's maybe, no. Okay, too late. In this kind of fast action, you can tend to just go along with the big orders for a little bit at least. So if I had gotten filled at 03, I could have maybe taken a few ticks off of that. Now that pop has already happened, though, I don't want to be messing with it again to see if it pulls. Actually, there it pulls. So. Get wrecked. Did you have a position on Uzi? What's the... Oh, wait, yeah, you're totally right. Yeah, it went right down to the seller's cost basis. It's, dude, isn't it so weird how like prescient it is sometimes? Yeah, I'll show you what he's talking about. Right, literally almost to the tick, right down to their line. Of course, the line moved quite a bit in that bar too. So, but still. As a guide for like how far is this going, it does kind of suggest that like people were buying because they thought that, as I did, that the services PMI was going to be weak like all of the other economic data was, and it was not. And so all of those buyers puked and took it right back to the seller's cost basis. They all lost. They lost this. It's a good example. Let me do that again. We'll turn this into a video for our documentation. So here on the cost basis, you can see, first of all, how much detail should I go into? Or no? So, now that I want to turn it into a video, I'm like, I don't even know where to start. Okay, so this is a cost basis indicator, and these lines kind of tell you average positions for the market makers, both their average position and like stop out zones. So you notice it's kind of hard for them to stay above that stop out zone for very long. There will often be a counter move after that. And if we do get like a big move, they will often come back to these cost basis levels like you see right there. And I can't tell you when they're going to make those moves to those price levels. But I tell you what, when they go to those price levels, it's awfully scary how precise it can be. So these levels can be extremely effective as profit-taking zones. How was that? How was that? Think I can turn that into a video? No comments. That must mean it was awful, but we'll still put it up. We'll still put it up. What's with financial juice? Global composite number came in late compared to trading economics. Oh, I don't know about that. I didn't see that. The thing though that I would note is that there's only like 2 or 3 major providers of this data. It's like Bloomberg and Reuters, and everybody else is getting their data from them. So maybe one of them, I think financial juice uses Bloomberg. So it might have something to do with that. I want to give that a try again. Here in this chart, so my cost basis indicator was one of my favorite indicators. It's definitely the most sophisticated in my indicator suite. And what this is trying to do is it's trying to judge where average market maker positions could be by making some assumptions that like all the limit orders are being filled by one player. What would their average position and profit be? And what that kind of does is it gives you like best and worst case scenarios. So don't assume that this is like the actual real reality. It's just kind of an estimate of a best and worst case scenario, but it ends up being really, really useful. So these blue and red lines are average positions, and the dotted line is like a stop out zone where like above this, nobody that was market making short has made money today, right? So it's very difficult for them to stay above that stop out zone. And when you do get a big move, they have a really strong tendency to come down to one of those lines and bounce like you have right there. And it's scary how accurate. I mean, it's usually going to be to the tick when they bounce like that. So I can't tell you when it's going to make a move to one of those lines, but when they do come to those lines, there's very strong chances of bounces. They make very, very good profit taking zones. I wouldn't even necessarily take the trade. Yeah, so when these move down, you know, there's a good chance of bounce. I wouldn't necessarily take the bounce trade per se, but it's a good place to take profits. Like if I was short here, you know, I would be thinking about taking profits there. Yeah. Is that a short enough video about it? Maybe I can turn it into a TikTok. The other thing I would say about financial juice is that it's different if you have the squawk, right? Because if you have the squawk, you're hearing him say it, and that's faster than the updates that I see on the interface. Okay, so they are continuing lower. I'm a little unsure what to think about this. Yeah, Refinitiv. It's about on par. Like, this is the issue, is that like one of the things that you get from Refinitiv that I found useful was that you do get, like, there's a place to see news. It's not like a news squawk, but there's a place to see news and economic numbers and everything. But it wasn't better than any, like, financial juice, right? And I wasn't getting data in Refinitiv about treasuries, at least, that I couldn't get elsewhere. It would probably be really good if you were trading stocks, though. And when you look at their marketing, it is, you know, their marketing is more geared towards stocks. So I think that makes sense why it would be like that. You know what? So I'm thinking about this and I'm like, you know what? I want to give this one more try. We're going to try and make this into a video, okay? So we had a big move here that is showing some interesting things on our chart. And so I think this would be a good time to explain how the cost basis indicator works. So one of my best and most sophisticated indicators, and basically what it's doing is it's a best and worst case scenario about market maker positions. So we have these two solid lines right here. Those are the buyer and seller cost bases. Basically, if you assumed that one market maker was filling all of the limit orders and they were only filling the limit orders on the buy side, like what would their average position be, and vice versa on the sell side. And then we're also considering, you know, every time that So like if I'm being filled on every buy, and then every time that there are fills on the sell side, those are profits, then how much profit would they have made, right? And that's where you get these dotted lines, so stop out zones. So like when you go through that stop out zone, usually doesn't stay there for very long, unless it's a trend day. If it's a trend day, they'll just kind of ride that line. But then the other thing is that if there is like a really big impulsive move, in this case, it was a news release, they have a tendency to go right to those lines, almost to the tick. I wouldn't necessarily try playing a bounce because, you know, if it goes through it, it's just going to slice right through it, right? But for profit taking, this becomes extremely effective as a profit target. That was better, I felt. That was better. Let me put in my notes. 811. 811 turn into not turn into video, but 811 the cost basis explanation. Because I think when you see that on a chart, you're kind of like, holy shit, right? Yeah, maybe there is something to it. So I'm still have mixed feelings though about the market. You know, like, okay, that was, first of all, like the move off of that release was a little wild, wasn't it? Just a little wild. And you know, it going up and then down and all of that kind of makes sense. Do I think like it makes sense that it goes lower? Well, I don't know about that. But the thing is when I look at the change in cumulative delta, that is about 40,000 contracts net sell. That is a really strong move. So I think I'm going to say it makes sense to me that there would be people disappointed by that number and net selling. But I also think that the market could be overreacting, right? Like, I don't know why it would be 40,000 contracts, because it's just one data point. We had a lot of other data this week that really suggests that the economy is slowing. Services had been the one that was kind of hot. It would make sense that it would take a little bit, or it makes sense that it would take a little bit longer to see that weakness in services, right?
Block by.
And yeah, Morgan K, by the way, good morning, making an astute observation that the dollar, it just like totally ripped off of that. This is another one where I'm like, okay, this is, I think, my best indicator. And it's the simple thing. It's like it's my best indicator, and it's funny because the formula for the dollar index is a public thing. You can go and you can look up what the formula is, and all we're doing is I'm looking at the FX futures on the CME and calculating the dollar index myself. Now, this number is going to be slightly different than the number that you might see if you look at the actual dollar index, because it is futures, and the futures price is going to be a little different from the spot price and everything. But still, it gives you a really, really good idea of what the dollar is doing. And how are people trading with especially commodities without knowing what the value of the currency they're trading in is doing? To me, that just seems like an essential element of being able to understand what the market is doing. And most retail traders don't look at it because they don't get live dollar data. But here with this indicator, it gives it to you. And I think it's an essential tool that every trader should have. And here the dollar is ripping. How much of this selling is because of the dollar and versus because they're disappointed? Well, there's 435, by the way. Can you imagine if they had moved the other way? If it had been weak, would we be looking at like 425? That's kind of a jarring shift. That's kind of a jarring shift. I think to make a video about the dollar, would really want to get a situation where like the treasuries moved and it didn't really make sense based on the volume, but then you go and you look at the dollar and it's very clearly the dollar that's moving them. Because that's the thing that I find it the most useful for. And I don't think that this one is a very good case. Oh my gosh, so I'm just now reading the Discord, and overnight they were talking about prop firms, and alligators called them poop firms. In terms of like what kind of derogatory name can I use to express my distaste for prop firms? Yeah, I'd say it's up the list there. I don't think we've found the perfect, maybe we need Donald Trump would be able to come up with a proper nickname for them, If only I had that kind of a knack, right? I was hoping for more data on more like analysis of the data that we just got, but ISM services come in strong at 53.8. Losing the stagflationary flare from the April print. Employment growth slowing but still traveling upward. No need for the Fed to cut. Economy heading in the right direction and supportive of stocks. Says Eric Wallerstein. I really like that guy's analysis. He's like my best guy on Twitter right now. But he thinks, Fed's not going to cut now. So like if the Fed's if this one data point on its own takes us back to like where we were last week, right? Then that means that this should go all the way to 4 or 5, right? That's like a good 15 basis points from here. Yeah, 15 basis points. Interestingly enough, well, how long has it been? It's been 20 minutes. They do appear to be making a hole of some sort. But I kind of suspect that they might try a bounce. So this spot right here at 31.5 is really sticking out to me. That seller average cost basis, it's also a value area low for the session. And it's also a spot where, low spot in the volume profile. So if we, maybe they do have a bounce. I do kind of feel like that this is a move that would be more likely to have a bounce rather than just settling here at 29. So let's see what happens. Is Refinitiv Icon not really. I think it's like 150 a month. And you get a trial period that makes it a lot cheaper than that. So like I tried the trial period. It was just like for it didn't help me trade treasuries. That was the big thing for me. Okay, by the way, the dollar is reversing here. I think this is a really good example of like this is a really good example of how I tend to use the dollar index, because sometimes I might see a move in the treasuries that doesn't completely make sense to me, especially if like the volume cumulative delta does not seem to be pushing. So in this case, like there was a little jump there, but like these further ticks up, what's with those? Well, the dollar is reversing. So it's probably the dollar moving that is causing the market makers in the treasuries to adjust their positions. Or rather, so it's probably the move in the dollar over here that's causing the market makers to adjust their bids and offers, and that's why price is moving up a little bit. And you'll see correlations like this, especially with the treasuries, but with everything, the equities, oil, gold, etc., etc. I wonder if I make this into a video. Oops. 816. I'm at 823. if I make that into a video, what should I put as the title? Ninja Trader Indicator Synthetic Dollar Index? Or I should say Synthetic Dollar Index Ninja Trader Indicator. That's what I should say. I guess I should, if I'm going to put this in a video, I should also say, and as always, you can download the indicator at speculatorseth.com. The download has a 2-week trial, so you can try it out, see if it works for you, and then a lifetime license is only $100. Yes, that's what I should do. I should just totally clickbait it. I made 5K a day using this one. And oh man. Okay, so they're back to that cost basis. Do you think that they will bounce here, or do you think that they're gonna run through it? If they bounce here, okay, well, okay, through 110 even is kind of a key level, so I'm not going to count that as like it going through it. But like if they continue through up to 02, then it means that it was nothing. But if it stops here and turns back down, then I'm going to be like, holy crap, guys. Like, wow. So I really hate it here on Twitter where there's some people that like they'll tweet about the numbers and they'll just reiterate what the numbers were and not actually give any analysis. I don't follow you as a news squawk, Mohammed A. El Arian. I want your analysis. I have news squawks. Okay, well, for the last 3 bars, they're just chilling at that cost basis now. Kind of seems like a useful indicator to me, but I don't know. You can download the indicator for free at speculatorseth.com and decide for yourself. Huh? Are you going to fill this out and like build a point of control around 10? 110? That would be interesting. Now, what about our other thing we got going on here? Oh, wait a second. It went over 1? What? It went over 1. No. There's still a problem. But is it because like something just gets reset in there? Oh, and it went below 0 too? What? What? Well, this one right here is probably just like the 10 minutes after it. Yeah, that's what that's about. But still. Okay, I'm gonna wait till the top. Okay, there we go. Save. And then we're looking for this one right here. Was it before the top of the hour? Okay. So right here it was negative, huh? Yeah, that sure is. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Some of these spots where it's like 0. And I'm like, was there really no trade there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Oh, it's like way off, guys. How is that? Oh, hold up. Oh, okay. So I actually think, actually 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. See, it's correct up to there. And probably even up to here. Some 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah. And then there's the gap in the day. And it doesn't get reset. But where is it getting this negative 94,000 from? Like, what? So, I think I may have just encountered a new bug that my logic here for on the day reset is wrong. Probably what I need to do is I need to make a method that's like on day reset or on new day or something like that, and do some stuff and like reset these to 0 on the new day or a new session or whatever. Probably. But I don't know, because I don't have no clue what would get it to negative 94. So well, I don't know. These numbers are probably correct. And it's just that because I don't know. So like one of the things is that I'm doing like a rolling thing. Like I'm going and I'm saying, okay, add this new data point and remove this one that's coming out of the window, right? Because that's the most efficient. It's more efficient than adding these last few up and doing it based on that, right? But this would probably have a lot less problems. So I am kind of considering changing it to that. But no, I really do think that it's just this session shift. I wish I knew why the session shift it changed. Oh, that's so wild. But I can figure it out after the stream. So if I had that correct, then those probably wouldn't have done those. That also means that if, like, Uzi, if you, like, restarted it after I gave you the indicator, the numbers that it's giving you are probably accurate because you wouldn't have that session break in your data, right? Okay, so they did hang out on that cost basis for a little while, and now they've moved up to the buyer's cost basis. The old one, yeah. It's so you know what part of the thing that's going on here is like I think that the old one would still give you like possible negative numbers and stuff in some situations too. Because it would have that multi-threading issue. But the general gist of the line is still going to be okay. It's like you only notice these things. Yeah, you only notice these things when like you start going through it. When you look at the like what the spreadsheet outputs, right? And the reason it's a problem is that I have some people that for whatever reason they will literally look at every single little number and double check them and stuff, and I'm just like, oh my gosh, really? You know, and then they'll find those like, oh, this is one off, and I'm like, who cares? Well, I care because I'm a programmer and I want to know why, but like, doesn't matter to your trading, you know? But a lot of the people that are into these things are like that, man. I don't know if it's like autism or what, but there's a lot of people like that. So I want to get it right. Yeah, I'm going to pull it up, the code up on another screen here. Just like yesterday, and go silent for the last 30 minutes trying to figure out why it did that. You haven't seen it go negative or above 1 yet? Huh. That is curious. And that's the one... That's this one. Not the cash one. Huh. I don't know. It'll still happen. But the problem that I'm experiencing right now, or that I'm seeing, that would be in the new version, that like it's going to be a problem that just got introduced in this new version, I think, because I am probably not dealing with the session breaks very well. Yeah, it does. Well, yeah. I mean, I bet you that your chart, like, the lines doesn't look too different from what they look like on mine, right? It's just the absolute values are slightly different because these two things. what it must be doing is like, you know, it's going to go bar by bar and do all of this stuff. And let's see here. If it's historical, it's not going to do that stuff. What will it do, actually? I'm not entirely sure here. I think that it will come in here and it will say, these were a historical bar. So try and load the data and stuff. Yeah. But I think that all I need to do. Oh, you use the square plot? That's interesting. That might be a better way of doing it too. Huh. I forgot about that. I might change that to the default. But I think all I need to do is so like I do this import export bit and everything, right? And part of what it does in the import is it says, okay, are we in a new session? If we're in a new session, then you need to go and get a different spreadsheet, essentially, right? Well, I should also have a method in there that says, are we on a new session? If we're in a new session, reset these values. But to make it like all class-based and everything, there should be a on new trading day method and that you can overload. I'm gonna reset it, and then that would probably fix that problem. I use it for everything that's the line it shows changes better. I think on like 1 and 5 minute charts that makes sense, yeah. Like if I just come in here and change it real quick. Imbalance line. I change it to square. Yeah. Now you can kind of see that it was like that. You're just able to read what it had a lot better. Make it a line and maybe make it like, maybe make the default be 2 pixels, right? Yeah. Okay, well, they didn't do anything at that buyer's cost basis. They like just blew completely through that. And they're kind of now in the choppy area that emerged just after the news. So, I'm a little frustrated by this market order imbalance thing that like it's getting really complicated really quickly again. So this same thing happened with the effing spread indicator. That like I was like, oh, okay. Spread indicator's not too simple. And then I started adding features, and every new little feature that I added made it more complicated. Like, oh, you want to have candles? Okay, like that's a lot more complicated. You want to be able to have 3 or more legs to it? Once I started adding multiple legs, it got so much more complicated and convoluted. But luckily on that one, I had a really, really good strategy for doing it that just worked out. And, you know, what can I say? I'm a genius. But this one is not, right? This one is like every step of the way, it's like, oh, I didn't consider that. I didn't consider that. It keeps getting worse and worse. But I shouldn't beat myself up over it too bad, because if it's just the change of between the sessions, then no, like that's, you want a screenshot of the same window you're looking? Oh, you sent me a screenshot. I see. Okay, so the first thing is that you do have it on a chart with pick replay. And oh, actually yours does look quite a bit different. No, it's close. No, where's the 1020? No, it's not close. It's not close at all. It looks different. There is still this little bit right here in that jump and everything, but it just doesn't reflect correctly on mine because it doesn't reset the number. Yeah. Here, I can actually, so if I do this, like what's going on will make a lot more sense, okay? So if I come into the indicator and there's these two running buys and sells data series. So if I make running, let's see here, running buys like, well, let's just make it cornflower blue and orange. Make this imbalance line be floral white, I guess. But you're not going to see it, and you'll see why here in a second. Okay, now it shows you what those numbers are, right? Like, what? Oh, now that's interesting that since I opened it up, wait, did it do a, no? I'm gonna say, did it throw an error or something? But no, it did not do that. But I did, well, that was only 40 minutes. Oh, you know what? That was probably where 10 minutes ago, I changed a setting to show you something. That might be why. Okay. But if we come back over to here, you can kind of see that like the running imbalance is like insane. It's like 54,000. Okay, there was not 54,000 net buys in that 10-minute period. That doesn't make any sense, right? So then you come over to where the data switched, which is like right over here. Yeah, right over here. It basically continued the imbalance from the session before. Oh, actually, that bar it switched. Oh, why is it like there? Why is it right there? Something about when it ended that it wrote 9,000. I should have looked at it like, because I'm wondering now, okay, what wrote that 9,000? And if I fix the issue, will that 9,000 still be there on like the last print, and then the next session it'll go back to 0 and be fine? I don't know. Kind of weird. We'll fix the first problem first and see what it does. But you see what I mean now? Is like when this session started. When this new session started, that running buy and sell should have just been reset back to 0. So, actually, you know what I could do? Yeah, the old one is working pretty fine. Yep. I mean, there was what was the problem with the one that you had, though? There was a few problems with it. Oh, the old one didn't have the caching. That's why. That's what it is, yeah. Oh, okay. What I want to do is duplicate this in new window. Indicators. Market order imbalance. Tick replay turned on. Watch, I'm gonna do this and it's gonna just expose another bug. No? Let's change this to the square. GameStop is doing okay today, guys. They back up to 30. this image right here. Yeah. Okay, see, now they look the same. Right. My problem is the tick replay data. Oh, no. What I'm saying is, okay. If you so you have this running and you're collecting like live data, right? And it's not the caching version of the indicator. You hit F5, these numbers will change slightly. And like where it was 0.7 on this bar, now it's 0.68 or something like that, right? Then that matters, right? So that's why we really want to cache it, because when the indicator is running live on your chart, it is more accurate than when it reconstructs things with tick replay. So that's why we want to cache it. That's all it's about. And so my change introduced a bug with sessions. It doesn't switch between sessions correctly. So all I got to do is fix that. Now it will change the indicator a little bit, because like right now it just runs through this session and it just keeps it up, right? Whereas in the future, every time the session changes, it should go back to basically 0.5, and then it'll complete it. Those first 10 bars will be different. First 10 bars of the session will be different. Well, yeah, if I've done it, well, you would have to like, if you like middle mouse click and it shows you the exact numbers, and then you'd be able to go through and you'd be able to see that the values were slightly different. Might not see it on, because in some cases we're only talking about a few dozen orders. But if you had the other data series up, you would definitely be able to see it. The numbers are slightly different. Unless, like, your tick replay data is way better than mine or something. But for somebody using the indicator, so like, because it is in the public version of it, right? So for those of you using the market imbalance indicator that's on the website, that will work perfectly fine for your purposes if you're doing it discretion. The reason why we're adding all of this stuff is so that it's more back testable. The other thing is that once you've refreshed it once, it's, you can't test it again. Right? You would have to like have it open for 30 minutes, let it do its, thing on the live data, then refresh it and look at the individual values. Do you have like both versions of it open next to each other, or are you just still using the old version? Anyways, I should minimize that. I keep that. I'll keep both of them. Well, today's session, once again, no trades for me. But, some of these past days I've kind of been like, I really wanted to take a trade. I'm probably not going to take a trade the rest of the week. I'm going to be like, tomorrow and Friday, I'm probably going to start being really touchy, right? Like, when I say touchy, I mean, it won't take very much to get a response from me because my nervous system is just ready to fire, so that's not going to be good for trading. But then on top of that, the reaction to that is kind of, I saw the number, I saw the initial reaction, but like, what should it do from here? No clue. It's not like the action didn't make sense or was confusing. It was just, I don't really have an answer for what they do from here, because it contradicts the most recent data and the most recent move that we've had so much, but it's only one data point. So I guess this raises expectations for non-farms on Friday. I don't know. And then what? You got inflation, and then you don't get PMIs again until the next month. It's just kind of like, I don't know. Could that kind of leave the market in a little bit of a suspended state for a month? I hope not. I think that some of these other data points that are coming here are going to end up mattering more in the end. So no big deal. So I will fix that. I will try and make videos. Kind of wondering how I should do the video thing. If I should just like put one out slowly. So I'm afraid that you put a video out like that and then the YouTube algorithm picks up on it and then like stops sending people to you or something. So then maybe you don't want it to, you put it on a video that's like doesn't show up on the feed or something like that. I don't know. We'll see. We'll see what I do. I'm going to do some research about it, I guess. But it's time for me to go, guys. Is there anything else we should cover real quick? Well, let's come over to Zero Hedge real quick and see if they've got a story on that PMI. Okay. Yes, they do. After the manufacturing ISM unexpectedly tumbled to the lowest level since February, led by a collapse in new orders which tumbled at the fastest rate since December 2023, markets were expecting today's services ISM to come in well below estimates and to be generally ugly. And as always happens, when Wall Street expects something, the opposite happens, and moments ago, the Institute for Supply Management reported that the May ISM Services Index unexpectedly jumped from a contractionary print of 49.9 in April to 53.8 in May, which was not only the highest print since August of 2023, but was also above the highest Wall Street estimate of 52.5. What is perhaps more important is that unlike manufacturing ISM, which saw new orders collapse to 45.4 and prompted a rumbling of a recession, the ISM service new orders actually jumped to 54.1 from 52.2, pushing the spread between the two new order series to 8.7, the widest seen since last October. Also note, the closely watched employment and prices indexes also moved in the right direction. Prices paid dipped from 59.2 to 58.1, below the 59 expected, and further away from the stagflationary territory where employment remained contractionary but rebounded from last month's. Here's the full breakdown. Commenting on the report, Anthony Niels, chair of the ISM, said the following: in May, the services I hate is just all the numbers. The contraction in April ended a string of 15 months of services sector growth, following a composite reading of 49% in December 2022. The last contraction before that was May of 2020. The increase in the composite index in May is a result of notably higher business activity, faster new orders growth, slower supplier deliveries, and despite the continued contraction in employment. Survey respondents indicated that overall business is increasing, with growth rates continuing to vary by company and industry. Employment challenges remain, primarily attributed to difficulties in backfilling positions and controlling labor expenses. The majority of respondents indicate that inflation and the current interest rates are an impediment to improving business conditions. In a knee-jerk response, U.S. 2-year yield is rising slightly. I would expect a bigger move. Well, okay. Euro USD is down about 0.1%, while USD JPY surged to 156.4, with the yen dropping as much as 1% against the dollar as the market is once again whiplashed in its rate cut expectations. I don't know. I feel like that was a pretty decent move and quite a bit of, Should we say confusion? I don't know. I'm just really not sure where the market's going to go from here. Tomorrow in non-farms, but now at the moment, still on the old one until you're 100% satisfied. Well, I should probably give it another day or two before I like really harp on you to use the new one. You know, because I thought I had tested everything, but then there's like, oh, there's a couple of... I should probably write something down and be like, okay, here's all the things that need to be tested. Okay. I need to get going. I will see you tomorrow. Stay excellent.